Welcome back. Now, the conflict in Ukraine alongside the possibility of further U.S. sanctions on Russian oil have raised concerns about the stability of global supply. Ukraine hit 10 Russian refineries in recent days, and traders are bracing for looming U.S. tariffs against India over its continued purchases of Russian crude oil. Proving the geopolitical backdrop once again has emerged as the primary catalyst for energy markets. Founder of Vanda Insights, Vandana Hari, joins us now for an outlook for oil amid all these developments. Thank you so much for your time, Vandana. Let's actually start off before we actually drill into Russia and Ukraine, because every single market has been reacting to the elevated tariff landscape, of course, due to the tariffs that Donald Trump has leveled against the US's global peers. How has the oil market reacted?
Hi, Zanati. That's a good place to start indeed, because that frames the macroeconomic backdrop that oil market participants are looking at, because it's very closely related to expectations for global oil demand and oil demand growth. You know, we typically tend to look year on year, what kind of growth can we expect? And even though the tariffs, the average rate has settled somewhere between 16 and 18%, which is way below what Trump had threatened on his Liberation Day, 2nd of April. Nonetheless, they are way higher than what they were on the 1st of January this year, before Trump took over. So the big picture as a result of that is that there is going to be a lot of upheaval in supply chains. In the corporate world, there is still a lot of uncertainty. Which countries how they are going to move their export chains around, whether they will be able to export to the US at the same prices, or they'll have to drop them, and so on. As a result of all of this uncertainty, and it is going to take time for all these countries, and exactly as you mentioned, all the countries have been taken in the sweep, right? So it's going to take time. And while it takes time, the corporate world has gone a little bit into sort of wait and watch mode. You know, there isn't as much of new projects happening, investment decisions have become stalled. So all of that paints a picture of a sluggish global economic growth. Nobody is predicting recession, but nonetheless, a very tepid sort of global economic growth, which then in turn translates to a not so great oil demand growth. And against that picture, you have plenty of oil supply coming onto the market, especially from OPEC plus. So that's the picture the oil market is looking at.
I'll also go into OPEC in just a bit, but then now I actually want to bring it back then to Russia and Ukraine. Of course, we know the talks that are happening, uncertain if further talks will be happening. So just talk to me about the impact of the Russia-Ukraine war as it stands on the oil market. Are there any clear signs of an outcome that the market is pricing in?
No, unfortunately, it's a very confusing, confounding situation with lots of uncertainty. Primarily, the uncertainty is stemming from it being unpredictable how Donald Trump will respond to the current stalemate that we see. So a week or so ago, we had that summit between Presidents Trump and Putin, which seemed quite encouraging. You know, leading up to that summit, the oil market had started pricing in a peace where sometime soon in Ukraine. So we saw a lot of risk premium disappear from crude. Crude came off nearly 10% in the lead up to that summit. The following Monday, he met with Zelensky, European leaders, and things seemed to be on track. Nobody expects this process to be easy or finish in a short time frame, but it has hit a major roadblock since last week. So what exactly Trump will do next is a bit hard to predict, because he himself has put out a whole range of possibilities out there, all the way from threatening more sanctions and secondary tariffs against the buyers of Russian oil, all the way to saying, I might just walk away. So, you know, these are like completely polar opposite situations. And there's everything in between that the oil market has to consider. So it's really very hard at this point. I think it's become a bit of a wait and watch game, but albeit a nervous wait for the oil markets.
It's actually interesting. I mean, you bring about that stalemate between Russia and the Ukraine and Donald Trump's threats to level more sanctions against Russian oil. But obviously, even with that and concerns of supply risk coming from Russia, is India actually cooling the market down at this point?
So India, as you were mentioning in your intro, is now facing a doubling of the tariffs imposed by the US from 25%, which was part of the Trump's trade tariffs against India. They're doubling effective tomorrow, the 27th of August, to 50%, the additional 25% being penalty for India continuing to buy Russian oil. Now, from what we understand, the Indian government has protested very, very strongly against this, and rightly in my view. And let's face it, India is not even the biggest buyer of oil. If you look at all the Russian buyers of Russian various commodities, LNG, coal, fertilizers, Europe buys, the US buys nuclear material from so India is in, I think standing its ground is very understandable, but as a result of that, we don't expect Indian refiners to stop buying Russian oil. So that is actually, to my mind, a bit of a stabilizing factor for the market, because hypothetically, if the Indian government were, let's say, to come out and say that we're going to stop buying Russian oil, immediately we'll have like 1.5 to 1.8 million barrels per day of Russian oil with no very easy, obvious alternative home to go to. And that could be quite a shock for the oil markets. But as of now, we don't see that happening.
You spoke about OPEC earlier. I mean, where does OPEC stand with oil production then amid all these uncertainties in the macroeconomic environment?
So for the time being, I think OPEC has, or OPEC Plus, we should say, has sort of receded a little bit to the background as far as drivers of oil market sentiment are concerned. The biggest upheaval that OPEC Plus, or rather the group of 8 members within OPEC Plus, caused was in the last few months when they put 2.2 million barrels per day of voluntary cuts that they had made since the start of last year, initially planned to bring back very gradually into the market over a period of 18 months, which would have ended in September 2026. They have crunched that period to 6 months. So ordinarily, one would have expected this is a bit of a supply shock, like as in too much supply coming into the market too quickly, but we haven't seen that either. So while prices have been coming down steadily this year, more because of the bleak macroeconomic picture, OPEC Plus's extra supply of the 2.2 million barrels per day has been absorbed in the market. But now that that is done, my personal feeling is that they will try to now sort of sit back, see how the market continues to absorb this additional supply. And especially as there are a lot of projections out there now of that there's going to be a major glut, oversupply of anywhere between 2 to 3 million barrels per day in the fourth quarter of this year, first quarter of next year. So I think wait and watch mode is what OPEC Plus will go into as well, to see whether they now need to take steps in the opposite direction. If there indeed is a glut, and should they take back some of the oil back out of the market.
All right. Well, we do have to wrap up the conversation there, but thank you so much for giving us an update on the oil market. Of course, something that is of major interest to us, as it forms a big part of that inflation picture, and particularly as we are dealing with tariffs. Really appreciate your time, Vandana. That was Vandana Hari, founder of Vanda Insights.